There are two things that every kid wants. Every kid wants to belong, and every kid wants to know the rules. And the most important place that the kid wants to belong is he wants to belong to his family. He wants to know that he belongs to his family. And the other thing is he wants to know what the rules are, right? So if he knows what the rules are, then he knows how to operate within the world. And if he knows that he belongs to his family, then he knows that there's a higher chance of his survival. And these things are going on unconsciously, of course. But what's behind all of that is what I want to talk about with you today. Like, why does someone want to belong? Why does a kid want to belong? Why does a kid want to know the rules? And when I say a kid or every kid, there's two things every kid wants. I'm talking about everyone on the planet, even you in your 30s or 40s or 50s or 60s or 70s or 80s. We all still want the same two things. But the question is, what is underneath those two things? And that's what the topic, the thing that's underneath wanting to belong and wanting to know the rules, that thing that's beneath that is what I want to talk to you about today. And it's right in line with what's going on with the stock market today, what's happening literally today, though the market is closed right now. But the stock market shows us that, in fact, all the people in the world, millions or hundreds of millions of free thinkers voting with their money, their wallet, their future, they want the same thing. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is certainty, because that's what we all want. And it makes sense why our brain wants certainty, because if we're certain about what's happening right now, then there's a higher certainty or predictableness to us surviving. And so that's what we all of us humans want when we look to the stock market, what we're looking for when we look to experts. We're looking for that certainty so we know what to do. And that's why people hate uncertainty. And this is a price chart of the Dow Jones Industrial Average, DJIA, and it is up to date going back to May of last year. So we have a good amount of data to look at. And you see that horizontal line. Now, that horizontal line is the low of last October. Last October was the bottom of the last, major correction up to that point. And then what's interesting is this red line is the 200-day moving average. Now, that's not necessarily what's so interesting. But what's interesting is the Dow Jones stopped going up in really February of this year. Now, it tried to go and break above that in May of this year, but it couldn't. Now, the Dow Jones Industrial Average has only 30 companies in it. So as far as, quantity, it's not that important. But the fact is, the companies that are in the Dow Jones are companies that have been around for a very long time. They are some of the most stable, well-run, largest corporations on the planet, in the history of the planet. And the fact is, they did a double top here. And this index is one of the worst looking indexes in the United States, right? It is trying to figure out if it should break below its October low of last year. And it, as of today, it is actually closed below it. That's not a good sign. So it's interesting that we have the most weakness in the largest, quote unquote, safest stocks. That's where the biggest weakness is actually showing up right now. And the 200-day moving average has turned over, meaning it is now trending down. That's not a trivial thing. This is a 200-day moving average. It took 200 days to get the last point on this red line. And it's been really falling since, I would say, the beginning of August. So we've got 5 or 6 weeks of it falling. So it's interesting that the largest, safest companies on the planet, they're actually falling in some ways, the hardest. Okay, so the next one, I also want to look at the S&P 500. Now this is 500 stocks, still 500 large stocks, but you'll notice that even though it has corrected hard, it is still above its October low. Now, it itself is also deciding. It is uncertain which way to go. That you know that, we know that, the world knows that, because it's getting tighter and tighter and tighter. It doesn't know which way to move. Should it break above this August point right here, or should it break below this August point right here? Now, if it breaks below, that's going to be pretty significant. And I say that because there's a lot of major indices in the world that look almost similar to this, where they're at major decision points. I'm seeing the price charts in Europe, in the US, internationally. It's happening all over the planet at the same time. So if the S&P does break below what I'll call the October 2014 low, even though it wasn't the low of 2014, but it has a huge fall right here, then we have much more uncertainty in front of us, much more uncertainty. And when things are uncertain, prices go lower. So the S&P is trying to figure out right now, but the Dow Jones clearly had made its decision, there's more of a downward bias to the Dow Jones than there is to the S&P. So I wanted to see what was going on with other indices. So the NASDAQ, okay, it's actually doing much better. I mean, look at where that October low is of 2014 and look at where the NASDAQ's decision-making point is. So the NASDAQ has been a much stronger index over the last 18 months than the Dow Jones or the S&P, and that's still holding true right now. A lot of that has been helped by Apple, though Apple's not really helping right now. But the NASDAQ has been holding up really well. I then wanted to look at what's happening in Europe. So just, we see what's happening. I was about to say North America, but of course the U.S. is not North America. We have Canada, Mexico, and a half a dozen countries in Central America, and then probably another dozen in the Caribbean. So, but look at Europe here. Look at where the October low horizontal line is on this chart. Europe's already below it. Now, it's got to break below the low of the year, but Europe's not looking good. And my first kind of indicator that something might be wrong is after the Greek referendum and after Greece and the EU got together and said, okay, we'll bail you out again, which the EU is really bailing themselves out again. The Greece stock market did not take off to the upside. It just kind of languished and started heading lower. That's not a good sign. And so Europe was really doing well from the beginning of the year to May. And something happened. The European stock market, I know there's not one European stock market, but let's just take this ticker symbol of all the European countries that are in the euro. Something happened in May. It looked forward and said, I see dark skies in front of us and, it's going to start heading lower. So if Europe closes below this, that is not a good sign. It's already heading lower and breaking below this October horizontal line. So Europe is doing much worse than the U.S. as of right now. And I say that from just like a price formation today. And then lastly, what I want to do is I want to look at the international price chart. Now, this is a ticker symbol of EFA, which represents Europe, Far East, and Australasia. So it's considered by many to kind of be the international ticker symbol, and that ticker symbol is EFA. If you look at this one where I put the October low of 2014, that horizontal black line, you'll see that it's already broken below that. So internationally, like if we kind of looked at three big chunks, just Europe, just the US, and then internationally things are not going well. And what's pushing or pulling down the international kind of price chart the most is China. China is not doing well. The Chinese government is scared. Now, what you have to understand about the Chinese government is they are not elected. It's not a democracy over there like in most of the West. I guess it's not a democracy in Cuba, but most of the places in the West, it's a democracy where you vote in the leaders. Well, in China, no one's voted in. It's a communist country. So it's going to be really interesting to watch how a country with 1.4 billion people, 1.4 billion people, led by officials who are not elected, they're going to be freaking out a lot more because guess what? They will get replaced. China has a very long history of revolutions. The biggest one happened in 49, then another really bad one in 67, lots of people die, governments change, internal conflict, which is, you could also say, is an internal war. So China's trying to figure this out, and they're kind of scared because, again, they're not elected. Now, I don't have a price chart of U.S. government bonds, but I was thrown off the last couple weeks why the price of bonds was not skyrocketing. Because typically when the stock market falls, people flood into bonds. And I actually think they were flooding into bonds. But on the other side of that, you had China selling tens of billions of dollars of their U.S. government bonds. And it was just eating up all the people who wanted to sell. So it's interesting. What's most interesting is a normal signal that would go, oh yeah, people are panicking. When people panic, they panic into the US dollar and the US bonds. But that wasn't showing up on the price charts because as people were panicking into them, you have the second largest economy on the planet selling a significant amount of their position into that volume. And it's just so interesting how in uncertain times, you can't always rely on what has happened. You have to go with what's happening right now. And these are uncertain times. We are in a deep yellow mode right now. We are in a cautionary mode. We are in an uncertain mode where there's a lot of uncertainty in the direction in which way the market's going to go. And it's a coin flip. I mean, no one knows. I don't know. I mean, I can tell you very long term, we're still in an uptrend for the S&P 500. Short term, absolute downtrend. Intermediate, it's just in an uptrend, but just about to turn to a downtrend. Doesn't mean it will. So super amount of uncertainty right now in the market. Now, the question is, RC, what do I do with this information? Look, uncertainty is where we are right now. So there's nothing we can do about it being uncertain. And just let that be okay right now. Now, I said this last week, but uncertainty is in the market. It's not something that just came up. Now it's kind of rearing its head. But follow a strategy that assumes that we will have periods of uncertainty, which we are in right now. I would not, this is kind of one more takeaway. This is not necessarily the time to be doing a lot of trading unless you have a history, 10 plus years, of being very good at trading positions in uncertain times. Most people don't. If you have a day job, you probably don't. You're probably not good at it. If your day job is being a financial advisor or money manager, you're probably still not good at it. There's very few people who can be good traders for long periods of time. And learning in an uncertain time is not the time to start. Hey guys, this is just another step in helping you protect your future and to protect your portfolio. Until next time, this is RC Peck. Hey guys, I just want to let you know I put together a new training that I'm super excited about. I actually do think it's probably my best training ever. And I've put lots of trainings together, lots of PowerPoint training presentations together, and you should be seeing a few emails about it in the next 10 days-ish. But the name of the training is called The Diversification Myth. It is one of the biggest myths out there that big box advisors and conventional advisors and conventional thinkers have taught us or inculcated us to believe, and it's just absolutely bunk. It's not true, and it's very dangerous to people's portfolios and their futures. And I put a great training together for you, so I look forward to having you get that. I'm working out all the bugs, so I'm actually going to provide the training to you this first time for free. And then I'm going to put a price on it. I don't know what it's going to be, $200-$300, but it's super meaty. It gets to the point. You're going to learn stuff. Look out for it. It's called the Diversification Myth Training. You guys have a great long weekend here in the United States. It's Labor Day weekend. Burgess's family is in town, so we got a family reunion happening at our house starting in a little bit here. Thank you so much for being in my world. You guys take care of yourself.